And as we promised, we have the Wipro management speaking with us live. I'll throw it over to Reema Tendulkar. Reema, all yours.
Thanks, Ronajoy. Wipro has come out with an inline Q2, though the guidance for the next quarter has disappointed a bit. Joining us on the show, we have Jatin Dalal, the CFO of the company, Saurabh Govil, the President and Chief HR Officer, and BM Bhanumurthy, the President and CEO of the company. Good evening, gentlemen, and thanks so much for joining in. Jatin, let me start with you on the Q3 guidance. Even accounting for the seasonality, it appears to be lower than what we've seen from the company in the December quarter. Can you call out the specific headwinds that you're facing?
Yeah, certainly, Reema. So, just a moment on quarter two. As you are aware, in quarter two, we came at the higher end of the guidance at 0.9% in terms of constant currency growth. As we come to quarter three, we say it as we see it today, and that is what we have guided for. And we have said the Apperio revenue from the day after we consummated during the course of the quarter has been added in our guidance. As you are aware, quarter three typically is a slightly different quarter. It has lower number of working days. It does have certain client impacts vis-a-vis furloughs, which has been factored into our guidance. We feel it's a good guidance as we see it today, and that's what we have guided for.
Yes, Jatin, the only problem is that even in the December quarter, Wipro in the past has seen better growth rates. For instance, last year it was at 1.4%, in the December quarter, year before that at 3.7%, and in the year before that at 2.3%. So even in a seasonally weak quarter, you've managed to deliver in December. So this time seems to be a bit different. But come in a bit more on Apperio, Jatin. How much can you scale up Apperio revenues of $195 million on an annual basis in the coming years? And secondly, what margin impact will it have in the coming quarters?
Yes. So, as you have shared, for calendar 2015, they had revenues of $196 million, and they have grown quite rapidly over the course of last 5 years to become the size and scale which they have reached. The market is very buoyant. The market remains exciting. And we have a great opportunity to cross-leverage Apperio's strength into our customer set. So we remain quite confident that it would provide us the acceleration that the market and opportunity offers as we enter the next year. We haven't specifically broken out margins, but they are well-managed firm for their size and for the type of work that they do. They have very healthy gross margins, which they invest in terms of sales and marketing for their growth. So we feel that as revenue and cost synergies kick in, there is a good path to improve margin further. But clearly, it's even well managed as we enter the firm.
Okay, scope to improve Apperio margins going forward. Mr. Bhanumurthy, two quick questions. One, India and Middle East has seen a decline for yet another quarter, down 1.1% in constant currency. And secondly, in your $100 million client bracket, there has been a decline. Could you take us through the two key reasons for that?
Yeah, so Reema, on the India Middle East business, we are taking certain steps specifically on the India Middle East business, and that's the reason why you see the trajectory that you're seeing right now. We are looking at the overall business. We have looked at the kind of customers that we work with, and the kind of projects that we're doing, and the manner in which we are executing to those projects as well. So that's the reason why you've seen the trajectory like that in India Middle East business. Coming to the top customers, right? You have seen the growth rate that we have given for our top customer, and you should also look at the overall how our top bracket customers are looking like. Those numbers look pretty stable, and but for certain currency impacts and things like that, I don't see a big movement in the top client base as well.
So the $100 million client bracket, which has come down from 9 to 8 in terms of a number, is on account of the currency moves.
Yeah, these are small movements, and yeah, that's what I would reiterate. Yeah.
Okay. Okay. And how many more quarters of pain do you see in the India and Middle East segment or geography?
So, as I said, right, I know we have already incorporated that into our guidance that we have given for the quarter, and that business is definitely need to we are looking at the kind of business that we are doing here, and we need to relook at the entire customer base that we have. We're looking at what kind of activities that we're doing. So that's what's included in the guidance that we have already given.
Okay, so the sense is it could be a bit subdued. Mr. Govil, you've managed to improve your utilizations to 71.2%, a 134 basis points improvement quarter on quarter. How much more can you improve your gross utilizations? Any target that you'd like to give us? And even on attrition, still above that 17% mark?
So, let me give you a color on the entire supply chain, starting from, and I'll speak about attrition and utilization, but if you look at the entire composite, very clearly hiring continues as per plan. We've gone on campuses, we have hired laterals, we are hiring in our new technologies like digital, cloud, analytics. So that is going as planned. If you look at the attrition over the last 6 quarters, it has played in a very narrow band of 1%. So it's very predictable. There are no spikes, but very clearly we would want this band to come down sub 15, and that's really our endeavor. From a utilization point of view, I have mentioned this earlier also. Last 3 quarters we are seeing a very clear uptick on our utilization, and we will continue to see that. I believe that there is headspace for us to improve further on this, and this is a big lever for us from a margins perspective as well. The other part is on the automation, and we had a plan about 4,500 people automation, release 4,000 people to do automation during the year. The first half we have done about 3,000 plus, so we are ahead of plan, and that will be another focus area as we move forward. So overall, if you look at it, it's a fairly robust plan, a lot of levers from a margin perspective, which will help us to move further, and there is headspace for us to become best in class here very clearly, and we are on that trajectory. But I would request Bhanu to add a couple of points in what we are doing from on the higher end of hyper automation on homes and other things, which will also enable in this journey.
So Reema, as you've seen, we have improved our utilization. Yeah. So if you look at the way we would like to get the work done, right? There are 3 pieces by which we could get the work done. One is part of the work could be done by bots, which is the hyper automation. The second place is you could utilize the wider Wipro employee base on a shared basis, and you could use the dedicated project teams. If you look at the 3 areas right now, on the homes which we have invested in, our artificial intelligence platform, it has brought in a lot more cognitive capability to automation. If we look at the Apperio acquisition that we have done, it has given us access to Topcoder, which is a crowdsourcing platform, and it will augment what we already have inside our organization right now. And if you look at the investments that we have made in the development rigs that we have built, right, that will increase the productivity within our project space. So the conversation will be in terms of how we can move the work around between these 3 areas quickly, and that's what will give us a much bigger operational efficiencies that we can see right now.
Okay, one word answer, the target utilization, Saurabh or Bhanu? Just one word answer.
We don't want to give a target, but I want to be best in class, Reema. Very clearly see a 3 to 4% headspace for us to improve, let me put it that way.
3 to 4% improvement in utilization is possible. Jatin, can the company go back to the 20% margins you used to enjoy?
Certainly we have shared our ambition, which is which we have said that we want to be $15 billion of revenue at 23% margin by 2020. So clearly 17.8% is not where we want to be, and we want to move towards that. But at the same time, what we must do is to take a step back and see what will take us to 15 billion, and for us to reach that 15 billion, some of the strategic bets that we need to take today, we must take. And if we have to take those bets, we will have to make small margin investments as those acquisitions consolidate itself and we start getting the synergy benefits. So that's where we are. We have invested in first from January onwards. This is the 4th acquisition we have announced, and I think they're all what will make us stronger tomorrow.
Gentlemen, it's been a long day for you, so we're going to let you go on that. Thank you so much for joining us on CNBC-TV18. So that's the Wipro management talking about the strategic steps that they're taking in order to achieve their 2020 target of $15 billion in revenues and 23% margins. Back to you guys.
Well, thanks very much.